everybody, I'm Giuseppe Basile, also known as the FibStalker, and among my services I run the FibStalker analysis and trading service, which I have here on FibStalker Signal on Slack.com. In this brief video, I want to recap what happened last week. Last week was week 7, 2018, from February 11th to February 16th, and we had some new members. We have now 76 people in the room. And I opened the room and mentioned that the SP500 would be moving higher, and now I was anticipating the 2703 now not holding. I do not anticipate 2700 area holding, as price has confirmed participation from an extension long, and that extension long is a larger FibStalker level 2527 level. Okay, so that's the reason why the market has not held. So we had, of course, our weekend review in two parts. Parts 1 and part 2 actually cover more than 26 markets, and then we started looking at the majors. We had Australian dollar, US dollar respect in the 28.17 area and pushing into potential area of resistance. So the market actually continued, and we had a throwback at some point. Every day I also provide a FibStalker daily intraday analysis, which is a brief 10 to 20 minutes where I also look at the actual opportunity. So the New Zealand dollar initially has reacted to that level that we had identified, and then eventually it broke it. On the other hand, last week was more difficult to trade because we were having this rotation and confirmation of this rotation of the dollar index. That was confirmed when the 89.65 level was pierced. In the meantime, we saw the SP500 continuing higher. There was a question from Diego asking if the dollar index starts moving lower, does it mean that the New Zealand dollar that would be an obstacle for New Zealand dollar to move lower, because New Zealand dollar had this FibStalker setup here, which gave a risk-free trade, and obviously, the dollar index is the majors will and the minors as well will tend to trade against the New Zealand dollar. Okay, despite that, we had our usual Greg taking the shorts on a very small time frame on this New Zealand dollar FibStalker level on the 5 minutes, and then actually closing 4.2 unit of risk adjusted for risk-free trading in gains. So of course, as usual, well done, Greg. So we had more reviews here, and there was a question also if when the dollar index moves lower, whether the SP500 will start moving higher as well, and that relation with the dollar index is not as straightforward as for the euro dollar, which is 63%. The euro is 63% of the dollar index. So what we know is that US dollar Singapore dollar correlates very closely to the dollar index. In fact, that correlation factor might be very, very close to 1, but there is not a direct correlation between the dollar index and the SP500, because the stock market moves depend on several aspects, including interest rates, valuations, current valuation, economic cycle, and also, of course, also the dollar index. Obviously, when the dollar is low compared to other currencies, the stock market, the American stock market, is perceived as cheaper, but that's not the case at the moment. Okay, and intermarket correlation between stock market and forex, it's very complex and can change, and nobody's going to send us an email when that changes. So we saw then the Australian dollar respecting support at 78.17, and we saw that move higher continuing, and eventually price came to test the opposing measure with the 79.48, which is still holding. Okay, on the other end, on the other side, we saw the US dollar, Singapore dollar daily trading lower. We also had smart money and up money set up short in this market. Very interesting is the US dollar Japanese yen, which could actually give opportunity this week. We've seen this market moving lower, and now this market has hit that second target at 105.70 here, and now we're looking for a reaction, and in the room we give the exact level where this market could actually react. Okay, so there were a few questions in relation to how we time and whether we could consider the Australian dollar US dollar short traded. So we actually answered those questions, and here we see the US dollar Japanese yen hitting that second target, and also the first target of the larger movie at the 113.45, and now the 106.92, the 107 level is going to be the level that we're going to watch this week. Okay, Australian dollar US dollar still has support, still moving higher, still has support below 78.80 area here. We could see a reversal of the move. Okay, and so we actually had a couple of members actually showing some problems, but it is very important to not use the 50% and buy and sell on the 50%. That's very, very important. There was someone who was still starting with the coaching and with the methods, who actually entered at the 50% of the FibStalker level and placing the stop at 1.8% level. This is bad practice, never recommended. And in fact, at the very beginning in my coaching program, I show how this basic method actually can actually produce losses, and there are ways to improve these basic methods. And the best way, of course, is to learn the FibStalking time, which is the proprietary technique that allows us to test the participation of the algorithms in the counter trend move. Every time we have a move into a support or resistance level, let's say we have a move into this blue 50% level, we have to look at the sequence of measure move higher, and when that breaks, only then we can declare that area participated. So we study this in the FibStalker methods coaching program. Okay, so and Craig is reminding them blind entry at 50% level is very dangerous. We must wait always for evidence of algos engaging before considering a position. So I will also answer, I didn't have time yet to answer this intervention. I want to give the right answer and provide the answer based also on the content of our coaching. So for people who do not have time for actually timing the market, it's very important not to just buy and sell the 50% level. This weekend I'm going to hold for the subscribers to the service. I'm going to hold a special webinar where I actually provide what I call the trading system 0 with different strategies for entries, risk management, risk-free management, and money management to actually enter this level properly. Okay, even if you don't want apply the FibStalking timing. There will always be a 50% a reaction at this 50% level, and that reaction is driven by algorithms, but that's not enough for to get a risk-free trade or to get a successful trade. Okay, and at the end of the week we also had some comments from Peter. And Peter is new to the room. He's not has not followed the FibStalker methods coaching program. So I'm afraid he's not using the levels properly. I noted, and I need to be very honest here. Hope Peter will not want me to punch me in the face, but there are some statements that may be very very dangerous. Okay, and for example, when we expect something, that's something that if you watch my videos, when I say I expect something, I always correct myself and I say I anticipate something. And there might be a small difference. It's a very important difference, because when we expect something, we create perception filters that won't allow us to really assess what's going on in the market. Okay, so we have always to use the wording we use is very very important. And also other expressions like it is hard to believe that the month moving average of the dollars will be pierced lower. Okay, so this is denial to me. And Peter, don't hate me if I say this. I say it's for the greater good and for you as well, because when we say something like this, hard to believe, you're trying to impose something on the market. I mean, we all are in denial for something. I don't like to see the dollar going lower, because a strong dollar means stability for the world. Okay, even if I don't live in US, if I'm not American, but when we say it's hard to believe, we are programming ourselves to actually filter out that information when we trade, and this is very very dangerous. And Craig has, I didn't have time to answer this, but Craig has anticipated some of the answers. We get in trouble as traders. Our beliefs are dangerous. We only have to look at that's what we do. We look at what the algos are telling us. Okay. And the last, and Peter, again, don't hate me. I mean, I'm going to note this as well. We are at a disadvantage without having the strategies in our trading platform, but we will never have those strategies in our trading platform. We are retail traders. The way I see it is that we are not at disadvantage. We have a big advantage because we can enter and exit the markets very quickly. We create our own success or failure in the market. There's no other responsible for our failure in the market. Yes, there may be the smart money or the brokerages or the industry playing tricks, but we incorporate the effects of those tricks into our strategies. Okay, so I wanted to say this, and I wanted to close with one confession coming from Pantelis this week. Actually, Pantelis said, never trade when you are not 100%, and this is common sense, but he had to experience it on his skin. And actually, what happened here is that, as you know, Pantelis has had great returns in the last 10 days, the first 10 days of February. And then in one day when he was ill, having the flu and he should be really, resting, he decided to trade. And then this was his confession, saying, I've been doing exactly the opposite of what I should do, and he was and he was trading. His screen was looking like blurred, and he decided to continue trading. Okay, so this is of course not a great idea, and he defined a new rule for himself: do not trade where you're not 100% in a good shape, period. And it's only the application of common sense, of course. And sorry to hear 24k, it's a lot to give back, and particularly the type of trading Pantelis does is really short terms and requires a lot of concentration and fast action. So obviously we can be hit by windfall of profits in the markets, but then the most important thing is protecting those those profits. And this has been a very expensive lesson for Pantelis, but I really appreciate having the gut and the you know the guts to come in and make a confession, and doing it in front of all will certainly help Pantelis to keep the rule, as you have made accountable yourself, with all the room. Okay, I just wanted to close with a recap of a brief discussion we had here on the tools to use, and obviously MT4 for new trader is a very basic platform, MetaTrader 4. So there was one of the members trying to set up NinjaTrader, and honestly I had the same frustration and difficulty to set it up. There was a discussion here. I mean, there were different traders, of course, from different parts of the world. They use different tools. So trading views was mentioned. Pepperstone was mentioned, and by the way, one of my accounts, the account with Pepperstone, was closed last week, so I cannot use it as a Canadian citizen as well. So US citizen cannot use it. I cannot use it because it's not regulated in US and Canada. Still regulated in UK though. If you live in the European Union or in UK, you can open an account with Pepperstone UK. Others use Motive Wave. It's another good tool. Now, for people who want to use the FibStalker levels on MT4, there is a tool for free that was developed by Peter Thiele, a past client, very successful as well in using the FibStalker methods, and so I gave a little bit of information here. There was a nice discussion. I mentioned that for MT4 there are three aspects basically that we need to consider when trading. One is charting, the other is advanced execution, and the third one is availability of your execution platform, because if you manage a risk-free trading, you have partial profits or targets. Only some of them might be held within MT4. So I suggest that I personally use FX Synergy. This is a Spanish product. I have no interest in recommending it. This is just what I use. It's a Windows application that connects to MT4 through an expert advisor, and you can control up to 20 MT4 accounts. It's very useful if you trade for a living and you do this. So for charting, on the other way, I adopted the TradeStation in 2009, and these are also the charts that you see on my screen, and this is what actually has worked for me, and I kept it since. And the third component for availability, it's a virtual private server. I'll talk more about this. You can use Bex FX. There are other products as well, and we will talk about that. Okay. Now, if you want information about the FibStalker tool for MT4, which is really a Fibonacci study that can be that is already adapted to the use that we do, you can actually look for the technical indicator FibStalker tool that was actually developed by Peter Thiele, and in here in the room there is also the link where you can find it, and it's actually, the cost is $20, and all the proceedings, they go to charity. So if you are interested and you want that, you can get it there. Okay, so this is it for this week. I hope to see you in the room, and you're gonna have another fantastic week in the trading room. Bye bye.